But anyway, you keep the property taxes low. That means where else is the tax coming from? On new supply. And they're going to get it from new people entering the market. That's part of the cost. Yes, a lot of that gets passed on to the purchasers, like the closing costs, the development levies when you buy the place, but a lot of that is still baked into the price. And land cost isn't getting cheaper. The cost to actually build something brand new just can't get cheaper than what existing resale is, which is messed up.
Look, I get it. The Toronto real estate market is confusing. Whether you're a new or experienced investor or just looking for a home to raise your family in, join us at Broadview Table Talks as we sit around the table with my friends and talk about the real estate and the ever-changing market in Toronto.
Guys, welcome to another edition of Broadview Table Talks, podcast number 71. And today we're talking about something that we just got a lot of interest on, a little post that we did a little while ago. You want to kick it off?
The condo crash is imminent. So that was the title of the video that we posted most recently. And it's got both positive and negative feedback, like every other video. But this one, I feel like a lot of people didn't actually watch the whole video. So today I just wanted to just elaborate on that on this video. And I wanted to talk about the condo market right now, the resale market, what's happening in pre-construction, just everything condo market related.
Okay, so for context, that crash is not happening and it hasn't happened and it's not going to happen.
It's very clickbaity.
The article is that, though. The article does say it's going to crash, but in the video that we created, it says it basically refutes all that because it's not going to happen. And it hasn't happened yet, and it's not going to happen anytime soon.
Yeah. Because as far as I see, the resale market, it's not bad. It's actually going pretty well.
Things are moving. Things are moving. Yeah. We're getting offers on properties, but it doesn't make sense for investors. That's the only thing. Like the rental rates don't pencil out for landlords because of the cost of capital.
Yeah. And not minimum down payments. Sure, if you have someone who's offering cash or who has a lot saved up that they can throw towards an investment property, then yeah, you can get the numbers to work. You can have a good cap rate there. But ultimately, if you're leveraged and you're doing the minimum 20% or 5 or 10%, depending on how expensive it is, then it's just not working out.
Right, because interest rates are really hurting right now. And it's not even so much the interest rates, it's that there's another option out there, like a risk-free rate. It's so high where risk-free rate, meaning just put in a bond and you get 5%, no issues about liquidity, no issues about selling it. Right. You'll get your money back, you'll get your interest, no worries about headaches of landlords, of tenants and things like that, right?
Yeah. So
that is a nice benefit. And if you're comparing the two, the risk of a safe investment, you just take money in and out of whatever, versus real estate where there is a lot that can go wrong with it.
Yeah.
That's why investors aren't flocking to condos anymore. And especially since with the new supply coming online, it has, in my opinion, I think pushed the rental rates a little bit down, a little bit more.
Yeah.
And you can see that in the data, actually.
Yeah.
The average rent is going down in Toronto.
Yep.
Yeah, recently, ever since, when was that? Right after fall? Then it just started dipping.
Yeah, you noticed it too, right?
Yeah, I continued to do that. Until today, I still feel it.
Speaking of new construction, though, that's an issue. That the real issue is people aren't able to close on new construction.
So that's what the article was mostly about, not resale.
Right. Because if you think about it, let's step back a little bit how this all works. When you're buying pre-construction, you're buying pre-sales, you have to buy, as a developer, you remember the numbers of what they were? How much of it was tax? 30%. 30% is taxes.
I just remember 30% taxes and levies. It was, 30 or 40% was construction costs. 20% were auxiliary costs and 10 to 12% was actual profit.
Yeah, the auxiliary cost is land, really 20% for land. So land prices are going up, construction costs are going up, taxes are going up, and all that, and the profit's like 10 to 15%, whatever it is, 12%. Yeah. Maybe that's shrinking a little bit. But ultimately, the costs of everything at every level is just so high that you can't build it cheaper than what condos are resale right now. So in other words, replacement condos for an existing condo is actually higher than what the resale market is. So you can buy cheaper than new today. People think that developers that are building new construction are jacking up the prices and they're greedy and all that kind of stuff. But no, it's actually so much risk. Like 10 to 15%, I think, is pretty reasonable for profit margin. Yes, it's overscale, but there's a lot of risk they're taking on.
Oh, a lot.
I really just took all of that in. I really thought it was just based on the home value. I didn't really take in all the supplies, the labor, everything also went up.
Yeah, everything will go up, right? Yeah. Construction materials and labor is huge, right? Yeah. Taxes, there's more taxes now for development levies and all this kind of stuff.
And they're talking about it again.
That's property tax. That's different. Yeah. But there's two taxes in when you're looking at property, right? Okay. There's development taxes, which means to create the supply. And then there's ongoing taxes, which is property taxes. Ongoing taxes have been kept low in the city of Toronto because nobody wants to pay more tax, right? The voter base don't move and they don't want to pay more taxes. Recently, that shot up a little bit with Mayor Chow. But before that, and it's still relatively low compared to everything else. So we're talking about like 0.63% or something like that, around that 60-ish percent, 2/3 of a percent. Versus like somewhere like Markham or Vaughan or whatever, they're like 1% or Mississauga or higher.
Right.
It ends up evening out almost because our home values are a lot higher. So it is still pretty high. So that's why they can't go higher than the percentage-wise. But anyway, you keep the property taxes low. That means where else is the tax coming from? On new supply to cover the budget. Because the city has a budget. And they have to meet a certain amount of revenue. And they're going to get it from new people entering the market. So that's been increasing steadily over the years, like significantly steadily. Like I think it's like multiples now of what it was before in a couple of years ago.
Yeah.
That's part of the cost. Yes, a lot of that gets passed on to the purchasers, like the closing costs, the development levies when you buy the place, but a lot of that is still baked into the price, right? And land cost isn't getting cheaper. So the cost to actually build something brand new just can't get cheaper than what existing resale is, which is messed up.
It is. It's pretty difficult. Not to play devil's advocate, but it does make sense as a developer because they're leveraging themselves to such a high degree. Like we're talking, 9 digits? Almost 9 digits for a project?
Depending on what it is, yeah.
Depending on what it is for a large scale
I think it's
project.
no cheaper than $1,000 a foot. You're not going to build cheaper than 1,000.
And it's like for an extended period of time. They have to make sure that they meet their deadlines. They have to build it within 3 or 4 years whenever they actually promise the buyers that they're going to. It's a lot of pressure and it's a lot of risk for 10 to 12% profit.
Yeah. Yeah, I know, because you can get stuck with the land. Like, even depending on which stage you're at, there's risk, right? So when you buy the land, first of all, you're going to do your due diligence for sure to make sure the project's feasible to build a condo if that's what you want to do. But then there's a chance you don't get your zoning. If you don't get your density requirements, then what? You're screwed with a super high expensive land that you bought.
Or if you go through committee of adjustment.
It's not committee, so it's rezoning. But anyway, if you go through rezoning, you don't get what you need.
Yeah.
The whole project is not going to be feasible. So obviously you try to do your best to do the due diligence ahead of time. Maybe the way you structure a deal with the landowner is that you say, okay, I'll give you this much amount of money, but you get a percentage of the profits or whatever. You get X amount of condo units instead of actual dollars. So you're not stuck buying the land, or it's conditional upon getting the zoning for it, right?
Right.
So there's a couple of things you can do along the way. But it's still, like, the numbers don't pencil out. If you're looking at $1,000 a foot to build, whereas resale already is $1,000 a foot, right? Plus or minus.
Right.
And you have zero profit, why would you even start it? Why would you take that risk on?
Right. Which is really problematic right now, I find. Because a lot of people, like, we're part of the Facebook groups that have these distressed or these sales that take place.
Okay, so before we get there, save that thought.
Okay.
So I'm going to talk about how the story is how to get there from. So if you're building at $1,000 a foot and you have to sell it for maybe 13, 14, even $1,500 a foot and where you're at. And if you remember, these were sold in 2017, 18, 19, 20, 2020. When the market was still hot, the pandemic hit, dropped down for a couple months because everyone was scared of what to do. And then all of a sudden, because we had cheap rates and the governor told us to go borrow as much as possible, everyone did. So we all borrowed and the market shot up for the past 2 years. Yeah. 2 years after that. So during that time, there's a lot of pre-sales going on too because the resale market was high. Pre-con got a little higher as well too. And everyone knew there was a premium to it. Yeah. But they thought, the trajectory is going up like this. You pay a little bit more. It's okay. We'll make it up in the future when the prices go up. Right? That's where we're at now. So go on.
So now we're finding that a lot of people who have gotten into these projects
at $1,500 a foot, $1,600 a foot.
Yeah, and now they're actually having trouble closing because they have to qualify at today's rates.
And the resale market is at $1,200 a foot. Let's just say
$1,200 a foot.
So not only has the property value shrunk, the qualifications tighter as well too. That means they can borrow less, and the value that they're borrowing on is higher than what they actually bought it for. So it's underwater at the end of the day.
Yeah.
So all the smaller investors, the one that had to over leverage for it or get the minimums, are screwed.
Well, some people even bought without the idea of even closing on it.
Yeah.
And just looking to just assign it.
Assign it easily.
And just flip it like you're flipping paper.
Yeah.
So the government stepped in, of course. Canadian government stepped in and they started charging 100% tax if you sold it within the year. So it's known as the anti-flipping tax. Which I guess it has its merits and all that, but that's preventing a lot of people from selling. Then you have to owe HST on the profit as well too. It's treated as business income as opposed to just real estate.
Yeah.
Before, you could argue the case where you were going to use it for personal, so then you didn't have to pay the HST on it, and it wasn't business income, it was just real estate income, capital gains income, I should say. So that's where we're at now. Yeah. And what are people going to do? So what our lenders are doing right now, they are lending to what they purchased at. I know they have to make a case. Like their appraisers, I don't know if they're told this or not, but like somehow the values get appraised at what it is. Even though you can go across the street in a newer building, an older building that was closed from a couple of years ago and get for, a lot cheaper, significantly cheaper. Right. It's called 10% cheaper, right? And I think that there's a lot of say that the banks want to get these mortgages because they're actually holding the construction mortage as well too. Like you're talking about several $100 million. Yeah. They want to get it off their books, close that deal out, and then shift the owners to the purchasers. Yeah. Because who knows, in 5-10 years from now, maybe it will go up back up. It actually should go back up.
It should. Ideally, in the perfect economic cycle. Yeah.
So anyway, in that video, I talked about how, just line by line, how it doesn't make sense. Where are they getting this information from? Because I don't think it's representative of all the projects out there. There's a lot of projects that were sold that now have good equity in it because when they come to close, they actually bought it significantly cheaper. Like we're talking like $800 a foot, when now everything's like $1,000, maybe $1,200 a foot, depending on the area and the building. Wow. So there's still equity to be absorbed, even though the interest rates are higher, the qualifications are higher, they can borrow less and all that. The values are still there. But as time went on and as those projects got more expensive, we're coming to a balance point right now where it doesn't make sense anymore. And buying brand new, there's still a market for it. There's still definitely a premium, right? It's like buying a new car. There's obviously a huge premium to buy a new car, but some people only want new cars. So I would say that there is still a market for this new construction stuff. It's a worry. It's a risk.
And why? And so just to have it in, sorry guys, English terms, okay? Why is this a problem so we know that the barrier is basically like, you guys basically just said it's expensive to enter it now. So like how does pre-construction before affect it in the future?
Because the life cycle to build something takes, from the time you buy it, when it goes on sale, they only sell it when the project's zoned, even with conditions, but it's imminent that they're going to get the property, like it's going to be built. They have the permission to build it. So at that point, it takes 5 years. But the time leading up to that, to get it zoned, might take 2 years, 3 years, 4 years. So total, you're talking about like anywhere from 8 to 10 years to build a project. But when you see it on sale, it's really the time starts ticking out from there and it takes about 5 years to build.
I see.
That's what I'm talking about.
I see. So that along with all the delays and then nobody wanting to buy it and then not enough funding affects the condo market later, or what the article is saying or the blog post was saying. And that's why that they state that the condo market is going to crash 5 years from now.
Yeah, it's more that there's a lot of inventory that the projects have launched. First of all, for the prices going higher and the nobody's selling, nobody buying right now, that's going to affect future projects. That's going to be a big problem down the road when we have so much demand and not enough supply. There's no supply can be built because of that, right? But the ones that are already started, it's hard to go back because you already have the site plan approval. Yeah. You only have that expires in 5 years, so you have to build it. Mm-hmm. And the project's not going to get off the ground unless you get 70% sold, because unless you're self-financing it, which nobody does, the banks won't lend you money unless you have 70% of sales. So there's proven demand for it. Yeah. They're not going to sell it to you if you have 20% sales, 30% sales, even 50% sales. They're not going to sell it to you. Yeah. They're not going to give you lending. Your question is, the people that have already put down deposits, say there's 20% of people that bought a project, right? Yeah. And the first initial sales, and that's what they got sold. They have to somehow get to 70% or 75%. How are they going to do that? So now these developers are trying to clear and wholesale the remaining units. Yep. Say there's 10% of units left. Okay. Yeah. And 60% of the purchasers already bought something at it's called $1,500 a foot. Okay. Right. So the remaining 10%, how are they going to sell it? They can't drop the price, because once they drop the price and it's on MLS, so,
that's when incentives come in?
Well, yeah, that's where incentives come in. But the reason why they don't want to put it on MLS is because it shows price history. So if any appraiser comes in there, say Michael bought a pre-construction condo and then now it's time to get a mortgage, the appraiser will look at the MLS, look at the address and see, oh wait, that building, that unit sold for, it's selling for $700,000, but Michael bought it for $800,000.
Oh, you just set the new bar.
So you just set a new bar. Yeah. So that's why they never go on MLS. Yeah. So instead of changing the price, and even price lists, those kind of get leaked out too, right? And show up in history somewhere. Yeah. So what developers will do is give you incentives. So they'll still charge you $800,000, but they'll give you maybe $100,000 cash back, or credit on closing, or maybe a new car, or maybe whatever, right? They'll give you incentives, free lease back, which you end up paying for anyway, right? It goes back to your pocket, or like a guaranteed mortgage even. So they'll offset the rate. Yep. So that's where these developers are having issues, and that's what they're talking about, those crashing the market.
I see.
Yeah.
which I don't think is going to happen because ultimately we still need supply. We're not
Still got
building
people coming in. Yeah.
There's still people coming to the country, and yes, there's political pressure to reduce immigration.
Yeah.
But it's all lipstick stuff. They can't reduce. So the problem is, even if they want to reduce immigration, they can't reduce immigration. The reason why is because our tax voter base is shrinking because our population growth isn't growing. So the productive workforce is shrinking. Our GDP per capita would have been like negative, multiple negative. GDP right now is positive, but it would be negative if we didn't have the immigration coming in. It's all supported by immigration, right? People are working, adding to the economy. And if it goes negative, there's a lot of big problems with that. That's like the bigger problem, if anything.
Yeah.
They're, as much as they say they're going to stop immigration, and what they're doing is starting with the students or whatever, just for political reasons.
Yeah.
But the problem with cutting students is that, first of all, there's nobody to serve you coffee anymore. No one to get your lunches, right? Because those are all student workers. But also, no, there's a lot of skill that, since they're already taking, they've taken their studies here in the school here, they're most likely going to get a job here. They're most likely going to want to stay in Canada because they got used to it over the next 4 years, right?
You take away the future, basically.
So it's going to be that much harder to get more people in because we need more people in the country.
Essentially, we need young people because we're in an aging population too, right?
Those are the best ones because they don't bring all the baggage of having maybe elderly parents, but they won't have kids and won't have like people that aren't productive in the economy and actually working and producing things and paying taxes.
Right.
I think immigration can't stop ultimately. And if it doesn't stop, and we can't build fast enough because the numbers don't pencil out and a whole bunch of other reasons, like our worker base is already building. There's already as many cranes in the sky as possible already.
Yeah.
And we just can't do more. Then that's going to be a problem for the fundamental supply and the prices of real estate. I see it shooting up because of that.
So we're basically on track to continue doing what we were doing before, except we're trying to fix it, but nothing's happening.
It's a big problem.
It's just getting more expensive.
I don't think anybody has a solution. No one has a solution to this. There's a whole bunch of little things here and there, like densifying land with the 4 units plus the garden suites, and then the affordable thing, and then like HST or GST rebates on purpose-built rentals, and a whole bunch of things that
cutting construction costs and all that.
Yeah, whatever.
Incentives.
30 amortization for CMHC new borrowers, whatever. There's a whole bunch of things that they're trying to do. All these policies. I would say it's a political thing. Like a lot of it does make sense, but there's no one solution to be able to solve this. And I don't think there's going to be any way to solve this for the next decade at least. At least. So I think the fundamental real estate pricing, it just can't drop. And not even mention like inflation and money printing and all that stuff, quantitative easing. At some point, we're going to get to that.
Yes.
And it's not that. There's an interesting stat that I saw somewhere. It was like, if you look it up, you just Google it. It was the house price compared to the gold price, right, over the past 30 years.
Right.
And they were equal, and they still are relatively equal, right? The only reason why real estate gets more expensive is because money gets cheaper. It gets diluted. The buying power of a dollar, like, what are lunches now, $20?
Yeah.
What the heck, right? I remember when they were like $5. Like, just, it wasn't like that long ago.
One dish for delivery is now $25 when it used to be 15.
Yeah, you know what I mean? So 30 is going to be a new 20 soon.
Yeah.
Right? So imagine that in real estate. That's exactly what's happening in real estate.
Our decrease, real estate's only more expensive because of our decrease of buying power.
That's right.
Yeah.
That's right. Where do you think I put in my money?
Gold.
Real estate. Put it in real estate. No way. Gold is too fragile. I don't believe in that. I don't know. Whatever. Anyway, it's more like there's a whole bunch of reasons of why real estate does make sense, right? It's not for everyone. It shouldn't be your entire portfolio. That's my mistake. I'm not going to do all real estate anymore when I get a chance to fix all this. But ultimately, like, it's leveraged, which is a good thing in good times.
Yeah.
It's a bad thing in today's time. A tenant will pay off your mortgage, like, over time. It's just like the nature of the amortization period of a mortgage already tells you how long it's going to take to pay it off. In 25 years, if you do nothing, it's going to be paid off. 30 years, whatever it is.
Yeah.
And then you get a lot of tax benefits as well, too, from owning. Now, namely, what are those tax benefits, you might ask? There's capital gains exemptions if it's your primary residence. So basically, any earnings, any gains that you have, it's completely tax-free.
Yes.
And if it's not tax-free, it's a rental property, then you get capital gains tax, which means half of it gets taxed. Half of it goes towards your income. I'm not talking about the flipping stuff. I'm talking about, like, if you actually earn $200,000 on it, $100,000 goes towards income. So really, you're only paying $50,000. It's assuming you're paying at a 50% bracket.
Right.
Makes huge sense. You get write-offs, right? You get to defer it. You get to defer your tax payable. So say you're making money on your rental income, then really that rental income could be deferred by paying depreciation or claiming depreciation. The capital cost allowance is like 4%, I think, per year, so of the initial asset. So that means you get to pretty much write off all your income that you normally would have otherwise paid tax on if you had normal income, like employee income, bonus income, whatever it is. If you have rental income, you're getting a positive cash flow on it, you get to write it off based on deferring it to pay it at a later date through the recapture of capital cost allowance.
Right.
And then in the meantime, gold just sits there.
It produces no income, right?
Yeah.
That's the thing. Unless you're in some sort of weird financial structure or whatever it is that produces income, for the most part, it doesn't produce income.
Yeah, points made for like why you should invest in what, but like it's not exactly saying to go that route, but diversify.
Oh, yeah, diversify and just get a little bit of everything. Make sure you spread your risk around.
Yeah, I mean, it's not financial advice or anything, but I'm just saying, like, real estate should be in everybody's portfolio, I think.
Yeah.
At least some part of exposure to it. It doesn't mean you have to own property per title. It could mean that you're buying a fund or a REIT or something like that. You should have some sort of real estate because it's done well for a lot of people.
Yeah.
But it's a different strategy, and it's just something different out there.
Mm-hmm.
So we talked about some positives, a little bit of doom and gloom too, but I just want to talk about the current marketplace. So Michael, what do you see with the resale market now for condos specifically, since we're on that condo brand today?
So based on the activities that we've been seeing from buyers coming in for the last couple of weeks, it feels like people that have been sitting on the sidelines waiting for the Bank of Canada job rates, it seems like they were very optimistic. They were just trying to get into the market for the last 2 or 3 weeks. And as predicted, they are pushing themselves to get what they can as far as value goes. They want the larger units. They want the ones that are more desirable. And that kind of leaves like the bottom end of the market a little bit quiet, like your 1-bedrooms, your studios. Like those don't get as much attention as the 2-bedrooms. Like we had that listing at 99 Cameron. It had a marketing price on it, and we got a lot of inquiries about it, and they all wanted the same thing. They wanted something that was reasonably priced, but 2-bedrooms. And if you were to strike up the conversation and say, look, realistically, the market price for a 1-bedroom is probably going to be around the same like value, they're like, okay, I guess I'm just going to sit and wait for an actual condo crash.
Which I don't think is coming.
Yeah,
right?
exactly.
The reason why people are able to buy right now is not so much the variable rates. They're not coming down anytime soon. In fact, we can't with the U.S. Economy being so strong.
Yeah.
And they're not dropping rates. They say they're going to drop rates, but there's no reason to drop rates.
No.
And the Canadian government's or the Bank of Canada is trying to protect our Canadian currency, because if our rates drop but theirs won't drop, then it's just going to screw up our currency. Our currency is going to be devalued so much.
Yeah. And
we're going to become the Mexican peso, as people were saying, right? But you don't have to go on variable rate, though. A lot of people forget about this. I don't know why. But there's fixed rates.
Yeah. There are.
And the 3-year fixed
is
rate,
pretty good.
Yeah, it's 5%.
Yeah.
Plus or minus.
5.19%,
Depending on what you're borrowing. But like, I just got one recently for 4.99.
Yeah.
Right? There is options out there. You don't have to go variable.
Yeah.
I think my lesson to this is just ignore the headlines. If it's right for you, do it.
Absolutely.
If it's not right for you, don't do it.
Yeah.
Yeah, it's very like dependent on the person. It's not really, I'm going to follow exactly what you did. I'm going to follow exactly what you did, especially because everybody bought something in different time, you're on different,
We're different stages of life. Yeah.
But I think in the long run, it does make sense. At least real estate does. And at some point, it's not going to be tied to income anymore. Actually, I would argue that it hasn't been tied to income for a very long time. Qualification is tied to income. A lot of people will there's a lot of wealth that has been created through real estate in the past, or it's just wealth in general in our economy. And those are the boomers that have it all, like the parents, right?
Yeah.
And they're passing it down. So if you're lucky enough to have won the gene pool lottery of being born to parents that have held assets and actually have benefited from that, they're breaking off a little piece for you to put your deposit down. And now so much it doesn't depend on your income as much anymore, right?
Yeah.
So I don't think that the average person is going to be able to afford real estate in the future, just like all the big major cities, New York, Hong Kong, San Fran, et cetera, Bangkok, whatever.
We covered that in a video last year.
Many videos.
One of them we said a lot of you are going to continue to be renters in the future.
It's just the way it is, right? And it's not a bad thing.
No.
It doesn't mean that everyone has to own real estate.
Yeah.
You could still own real estate by not holding the title.
Yep.
You could buy a fund. You could partner with people even, for example, if you want to hold title to it, right?
Yep.
And I think holding title comes with a lot of responsibilities too that people don't understand. Taxes, maintenance, insurance, blah, blah, blah. All
It's
this
a
kind
big
of stuff.
financial risk if
vacancies.
things go belly up.
Whereas if you're in a fund, that's professionally managed, and you're just a small portion of their bigger pie, huge pie. Maybe it's the same portion, but it's a bigger pie, much bigger pie than if you were by yourself. It's like a group buy, if you will, where you can enter and exit out of freely as well. That already has a lot of benefits too. Having the liquidity of getting into a fund that's publicly traded or whatever.
Yeah.
The reason why they don't shoot up as much is because you can enter and exit anytime soon, anytime you want. There's like redemptions, right?
There's a lot of flexibility tied into it. Yeah.
Which is huge. So moral of the story, real estate in the long run makes sense. It's not going to make sense as an ownership anymore in the future. And the more and more time goes on,
Yeah.
it's just going to get more expensive and people are going to be priced out. It's just the way it is, unfortunately. Move to a smaller city if that's what you want. If you want to own real estate. It's unfortunate. And that's pretty much it. I don't think it's going to crash.
Yeah, do what's right for you. All right. Thanks, everyone. I guess that's it for today then. Thanks for tuning in. Make sure you subscribe, comment your thoughts, and catch the next video.
All right. Thank you.
Bye.
Add it up. Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe. But more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.